indirect taxes across different sectors are now decided in the GST Council meetings, not in the budget. So I would say that there are three key variables to look at. Number one, the total government borrowing program, which is, of course, allied to the fiscal deficit that would be targeted. And that would, in turn, decide the extent of where the yields would go and the extent of crowding out of private investment. And as a consequence, that would have a bearing on the justifiable valuations of various different financial assets. Second, one would also have to look at the non-fiscal announcements, but which could have an important impact on foreign direct investment and other investment intentions of foreign portfolio investors as well. So, for example, if the tax proposals or the direction, the broader direction of tax policy is, kind of adjusted in favor of foreign direct investment, that would obviously be an important data point to focus on. And third, the assumptions. What kind of assumptions would the budgetary numbers be based on? And that is something we would have to look at. So if the market is satisfied with these three key variables, then I think that would be half the work done.
Okay, Manishi, to some extent you're right that there isn't that much elbow room, especially when it's an economy that's coming out of a negative contraction in the current year. But, we've seen a fairly good run of earnings. So do you think India remains a buy, provided the budget doesn't do anything wrong?
Right. I would tend to agree with that point of view. We are still overweight India. We are currently overweight China, India, Korea, and Indonesia. And in case of India, we're focusing on two things. Number one, the earnings estimate increases that we have seen over past 6 months, and they have been broad-based across various different sectors. And how the large sectors are doing, particularly banks, IT, and the consumer discretionary and staples. And whether we're seeing momentum across, the large frontline companies operating in these sectors. And I would have to say that, yes, we are. In fact, we believe that the biggest bugbear among the banks that was prevalent even 3 months ago is possibly behind us, and that was the asset quality question. Our channel checks from on the ground across various different cities that our India team does clearly indicates that variable, that concern, despite the RBI having talked about asset quality worsening, is possibly behind us. So yes, based on these parameters, we remain overweight India, despite the premium valuations that the market is trading at, because we believe that the valuations could be supported by earnings estimates moving up and the very low cost of capital that we are seeing today.
Okay. Manishi, good morning. In fact, I wanted to take that argument forward about asset quality being stable. We saw that in ICICI Bank's numbers as well, right? Stable asset quality, normalizing of credit costs. Are these private sector banks top picks for you now, despite the run-up that we've seen? Would you still put money here?
We would. Our favorites among the banking and financial space still remains the private sector banks, private sector insurance companies. And there are two reasons behind them. Number one, private sector banks clearly enjoy better asset quality than the public sector banks. Number two, they are clearly still gaining market share and are likely to do so for the foreseeable time horizon. And they have clearly demonstrated that as far as technology adoption and using technology to garner, low cost deposits and better customers are concerned. On that effort, the private sector banks are still way ahead of their public sector counterparts. So, yes, to cut a long story short, we are still positive on the private sector banking universe, despite the run-up that they have seen. And we believe that for quite a few of them, the premium valuations are justified.
Okay, Manishi, we will leave it there today. Thanks a lot for joining us. Of course, we won't have to wait too long. In just about 2 hours and a few minutes, we'll have the union budget. But should one trade in this market, either pre-budget or post-budget? That's an equally important question, apart from how you should trade. Sudarshan Sukhani and Mitesh Thakkar now joining us. Good morning. Sudarshan, big day, of course. What's the trade setup looking like, and what would be your call on how to trade today?
Right, good morning. This is one of those big days when the trade setup is so easy that the call can be made quickly. We do not trade on big news days. This is a rule that I have made, and I have found that it has rewarded me time and again. The volatility during those 3-4 hours of the budget presentation is so large, and especially for the Nifty Bank, where 400 points up and down can happen in a few minutes. And for the Nifty, a similar movement on a slightly smaller scale, it's not worth trading. Now, suppose today was not a budget day, then I would still remain short and look to go and sell on rallies. But looking at what is the chart pattern and looking at what has happened last week. But because it is a big news day, there's no sense I close all my positions before the budget presentation and wait 3 to 4 hours for Lata to give her detailed explanation, and then I enter the market.
Sudarshan, don't put such an onerous responsibility on me. We'll have a lot of experts to do that. But you know, Mitesh, actually, I wanted to ask the same question. Asia starting front foot forward. I think we should pull up all those numbers for you. Asia at the moment is ignored the Wall Street fall of Friday. You know, there you are, SGX Nifty is up about 1/3%. Mitesh, you going to echo Sudarshan, or would you go? Would you cover shorts or go long today?
We've had some shorts, given the fact that we had broken 14,150 a few days back, trailed the stop loss to 13,950, and then we saw a break below the levels of 13,750, 700 as well. My belief is that I think this market will be more negatively biased, though I think with 6 days of fall and nearly about 1,000 points shaved off from the highs, I think there is a chance of a pullback, especially on a news heavy day like today. That could happen. So the idea is that you trail your stop losses to about 13,770 odd levels, which is just about the 50-day average and the pivot levels. In case that doesn't get hit, then I think maintain your short positions, and you might look at levels of 13,430, even 13,325, something negative comes across. But in case we start getting past 13,770, then I think the bounce back could extend to about 14,100, 150 zones, which is where I would want to short again. So that's the way we'll approach it. It will be a volatile day for sure. We all know that we have seen the budget days for a number of years now. So therefore, you need to just trade your stop losses and see if getting a good reward equation to enter afresh in case those trading stop loss levels get hit.
Okay, I think both Sudarshan and Mitesh have made interesting points, and Sudarshan referred to 400, 500 point moves in Bank Nifty in minutes. Today it will happen in a few ticks as well, and on the Nifty as well. So perhaps the stop losses will have no meaning because there's a good chance that it triggers both ways. So perhaps we want to wait it out. But let's talk about stocks then. Mitesh, good morning. What are you trading then?
So on the stock side, I have a mix of buys and sells. ICICI Bank is a buy. The SGX was negative in the morning, so I had taken it as at a mild dip, but around even opening at same levels or just mildly above that can be bought with a stop below 530 for targets of 550. Shriram Transport Finance is a buy with a stop at 1250 for targets of 1345. Two sell calls: Page Industries, sell with a stop at 27,550 for targets of 26,100, and Escorts is a sell with a stop at 1226 for targets of 1160.
Okay, well, Escort comes out with earnings today, so let's see how that one shapes up. By the way, there are auto sales numbers that come out today as well. So apart from the budget, many other things to track. Sudarshan, good morning. What are the stocks that you would advise buying or selling today? And, a lot of these stocks have come out with good numbers, right? ICICI Bank, Tata Motors, Tech Mahindra. As an investor, should you look for buying opportunities after this whole budget volatility plays out?
Good morning, Sonia. As an investor, I would certainly look at buying opportunities, not just because of the budget, but because of the 1,000 point decline in the Nifty. This is a bull market. Now we can go down lower. Nobody can say how that will work out. But at every low, every dip, every lower level, you buy blue chips. 2021 is the year of the blue chips, not of mid caps and small caps, and go for that. So with the names you've said, L&T is certainly a buying opportunity, and it also comes in my list for today. So I'll just tell you the list itself. Indigo is a short sell. It's an intraday short sell. The trend is down. So I think irrespective of what the budget does or how the market reacts, it should continue its downward slide. Everything else is a buy because they are top quality stocks. Cummins has come out of a long bear market. There is significant upside here. So we are looking at stocks that will be affected by volatility but are worth holding anyway. HDFC Bank is a buy. You asked about ICICI Bank and good numbers. If at all you want to hold a bank in this private sector banks, the first choice should be HDFC Bank. And finally, L&T is a buying opportunity. These are not intraday buys, but you can hold them in a few days' time. You should be getting money out of that.
Mitesh, you?
Yeah,
Any more?
I think I've already covered my stocks.
Okay, all right. You're sticking with what you've already said. All right, fine. We'll do one thing. Gentlemen, we'll take a break. Thank you for your views. We'll try and find time to come back to you after the market opens and gives us some initial takes. For the moment, we're going to a break, and we also want to give you a CNBC TV 18 announcement. The website, or you can use the CNBC TV 18 app as well for more comprehensive coverage on the budget through the day. The details will keep coming for you. For now, we're taking a break, and I'm going to invite two more experts. Sandeep Bhatia, the India head at Macquarie Group, will join us next. We also have Nilesh Shah, the managing director of Kotak Mahindra Asset Management Company, and Nilesh Shah, the managing director and CEO of Envision Capital, joining us. So the two Nileshes are going to be with us together.